It's no secret that the housing market has been completely bonkers since the pandemic began. The good news is there are early signs that the market's cooling down, which is excellent because the market can't keep growing at the rate it has been, and buyers are about to jump off a bridge. And while this might sound like bad news for sellers, a stable and healthy market is in the best long-term interest of homeowners. I'm Eric with Eric Andersen Homes, and in this video, we're going to look at what the data shows about the current market. And on top of the data, I'll share a little bit of my own recent experience. Over the past week, I've shown a handful of homes that have been on the market for 30 plus days. The last time I can remember doing that was well before COVID. Since the pandemic, it seems like everything has been selling the first weekend. If you blink, it's gone. I've also seen more price reductions lately. Buyer demand isn't quite as ridiculous as it has been. It's still a seller's market, but we're seeing early signs of cooling. Now, when we talk about a seller's market or a buyer's market, we're talking about inventory levels. When the supply is greater than 6 months, we call that a buyer's market. A buyer's market is one where the market is saturated with listings and supply is higher than demand. That favors the buyer. When inventory levels are below 6 months, that's a seller's market. Demand is greater than supply, and that keeps prices up and competition high. Here you can see that current supply levels in Burr Ridge are at 3.1 months. Hinsdale is at 2.2, Downers Grove is at 1.4, and Brookfield is at 1.1. The other thing to note here is that inventory was much higher in 2019 and early on in 2020, but it has dropped sharply since then. In Burr Ridge, inventory decreased by 70% since before the pandemic, going from a 10-month supply down to 3. And at a 3-month supply, it is still clearly a seller's market. But as of May 13th, mortgage applications were down 12% from the previous week, or 15% from a year ago. As demand begins to decrease, this has forced more and more sellers to reduce their asking price. Daryl Fairweather, chief economist at Redfin, said, "Sellers are finally starting to drop their prices at rates we haven't seen before the pandemic. Home sellers are now rushing to find a buyer before demand gets any weaker." Still, we shouldn't overstate the case. The number of homes that had price reductions only increased 1.3% in April, or almost 7% year over year. As of this recording, there were 20 homes with price change status in Burr Ridge, Hinsdale, Downers Grove, and Brookfield, and many of these price changes were significant, many falling into the $25,000 to $50,000 range. One culprit for the slowing down of the market is rising interest rates. Last week, rates were sitting at 5.25%, an increase of over 2% since the beginning of the year. This has had a big impact on monthly payments. The median mortgage payment at the beginning of the year was $1,700. Now it's almost $2,500. Fannie Mae projects that home sales will be around 10% this year, which is a 1% decrease from last year's 11%. David Pearson, economist with Nationwide Mutual, said, "The housing market is cooling and we're likely past the peak in home sales, especially for existing homes. House price gains have been unsustainably rapid, even faster than during the housing boom of 2002 to 2006. Importantly, this won't be a repeat of the housing bust of 2008 to 2010. The people who bought homes over the past decade can actually afford the mortgages they got." A study by Redfin showed that bidding wars are slowing down as well. In April, 61% of listings had multiple offers, down from 63% in March and 67% from 1 year ago. In April, 66% of people surveyed in the Home Purchase Sentiment Index said it's a bad time to buy a home. This is the lowest level since May 2020. Only 19% said they thought it was a good time to buy. The reason you might consider buying now is that home values will continue to appreciate, albeit at more sustainable levels, and interest rates are expected to continually rise through the summer. This means that waiting to buy will cost you, as higher home values and rising interest rates will only make homes more expensive. The benefit of waiting is the competition level for homes should be lower. Fewer homes are getting multiple offers and selling above asking price, and as we've seen, some are even reducing their price. A year ago, asking price was more like opening bid. But still, waiting to purchase will almost certainly cost you. You may have less competition and get a home for asking price or below, but future asking prices and interest rates will most likely be higher. Another benefit of waiting is for those who would like to buy but also have a home to sell, and their purchase is contingent on their sale. Getting a home sale contingency accepted over the past 2 years has been next to impossible. But if there's less competition, sellers may be more willing to take the risk of accepting a sale contingency, which eases the pressure for those having to buy and sell at the same time. All right, a few final points. The National Association of Realtors just reported that new contract signings are at their slowest pace in nearly a decade. Pending sales fell 3.9% in April, which is the 6th consecutive month of decline. New construction sales dropped by 16.6% in April, which is a 2-year low. So to summarize, current market conditions are still decidedly in favor of the seller, but we're also starting to see a few promising signs of the market starting to balance out. If you're thinking of buying and/or selling a home, or would like some more insight into the current market in Burr Ridge, Downers Grove, or the western suburbs of Chicago, reach out to me anytime. I'm Eric with Eric Andersen Homes, here to remove the headache from real estate and provide expert guidance for your next purchase or sale.